This video, in this video, we're going to deal with the financial sector here in Des Moines. We're going to talk to my friend Steve Simon. Steve is the president of Central Bank. We're going to get some perspective from Steve on the whole financial sector, how his business, the banking business, has done here recently, and what changes he feels are going to come down the pipe here in the future. This is Steve Simon, my good friend Steve Simon. He is the president and CEO of Central Bank here in Central Iowa. Steve, you've been a banker for how long?
Been a banker since 1983.
Wow, you're an old hat at this.
I'm an old hat.
You don't look a day over 40.
Thank you, Jeff.
And tell us a little bit about Central Bank here in Des Moines as well as the other locations,
Sure.
Jeff.
Central Bank is actually the oldest business in Buena Vista County, founded in 1877 in Storm Lake. We've got 8 locations in Storm Lake, 8 locations in Northwest Iowa, Storm Lake, Spirit Lake, Cherokee, Sioux City. Came to Des Moines and opened this office in 2012. A year and a half later, we purchased Liberty Banks, so we have 8 locations in Northwest Iowa now and 8 locations in Central Iowa. We're about a $700 million bank, which puts us, give or take, as the 20th largest in the state of Iowa.
Outstanding. Fantastic. Okay, the issue with this particular video is to point out how important the construction industry is to the vibrancy of the economy, both locally as well as nationally. Construction industry makes up a lot of jobs, and it ebbs and flows with interest rates and with construction and so forth. But all that entire industry gets their money from the banks. Without the banks, there would be no construction industry. So as it relates to why we're here today, tell us a little bit about how loan demand has been and the loans that you've made both this year as well as maybe over the last 3 to 4 years, and ever since we came out of the recession of 2008.
You bet. Central Bank's been very fortunate coming out of the 2008 downturn. We've continued to remain about 100% loaned up, which means we'll take 100% of the deposits that we've gathered and we'll turn them into loans. And that's the most efficient for us, and hopefully that's also beneficial to the borrower and to the economy. So 08, 09, 2010, a little soft, but still okay for us. Starting about 2011, the economy really started to pick up. 2012, housing started to come back. 2014 was an all-time high record year in earnings for us and loan demand for us. 2015 will be a repeat of that. Again, it's being led really by land development, home building, and the commercial segment will follow that, because as your consumers build homes, spend money, they need to furnish them, they need equipment, they need supplies, so the commercial sector will follow the residential sector, so been very strong.
So all areas, commercial, residential, new development, you're into all those, you see all those things happening here in Central Iowa.
All of them very strong.
Excellent.
Yep.
All right. What do you think potentially a rise in interest rates will do to the loan demand here as we see it over the next, let's say short term, let's say it happens before the end of the year, maybe in the next year, and more longer term over the next 5 years?
Really don't see any impact to speak of, Jeff. I think the markets have already built in an interest rate increase. The Fed has announced it. They've told people it's coming. Rates have been at an all-time record low for a long, long period of time, as you know.
Yep.
And so most people are expecting a rise in interest rates. In fact, the bank's balance sheet is positioned so a rise in interest rate actually helps us.
Excellent.
From an earnings standpoint. And whether a home mortgage is at 4% or 4.5%, really not a big change to a lot of people.
Right, right. Excellent. Well, that's very important from our perspective, the construction industry as it drives the economy. It's one of the leading indicators. And then that obviously is an indicator of what's going to happen within the stock market. So positive words, very appreciated very much. Thank you much
Thank you,
for your
Jeff.
time, Steve.
Appreciate it.
All right.